Good afternoon, everyone, and welcome to Perspective on Sustainable Development, Episode 3. I am your host, Chris Whitehead. And for anyone watching on video right this second, you can actually also notice that I am choosing to wear my Yankees hoodie today out of mourning, largely because it seems like every player they have is dropping. So they need some type of insurance policy, some I don't know, backup plan for what's going on. And that's a horribly cheesy segue into what we're going to be talking about today. We're going to be talking about climate change again today and how specifically it impacts the insurance industry and how those impacts and associated changes can be passed down to consumers. With the rising climate impacts all of us have witnessed around the world over the last couple of years and stronger storms that we're frankly still cleaning up from in a lot of areas, you have to stop and think, what are these rising costs going to do for future projects, for taxpayers? How are we going to be able to get through this, and what type of changes are going to be in store? And there's a lot of misinformation and frankly disinformation out there on the topic. So I want to bring on a couple of experts to just tell us what's going on, how insurance companies monitor these things, and try to change their insurance plans up accordingly. I'm sure I'm going to learn quite a bit, and I'm sure you are as well. And just before we get started as well, I just wanted to note that I'm constantly amazed by the notes I get from listeners to this program over the last year or so. And we're currently up to 59 countries in Asia, Africa, all over the world. So those out there listening, I see you. I appreciate all the feedback we've been getting, and we're going to continue on this project. But without any further ado, I'd like to bring on Justin Roth from Howden Re and Mike Perron from F1 Global. Can you just give us a quick high level on your background and how you got into climate change work?
Yep. My name's Justin Roth. I have about a decade of experience within meteorology, beginning my career in the broadcast sector. So the weather guy that you saw on TV, that was with me. And then I made the pivot into insurance. Specifically, I worked for a reinsurance company, EMC Re. From there, I moved to American Integrity Insurance. Now I work at a brokerage firm, Howden Re, where insurance companies are our clients. And a lot of my work within the R&D department is involved with perils and understanding exposures and understanding how the models work and how they affect our customers, which are the client or the insurance companies in general. And then obviously climate change kind of all gets wrapped around in that.
Well, fantastic. And thanks again for joining. Mike Perrin?
Hi, Justin. Hi, Chris. I'm Mike Perron. I've been in the insurance industry most of my 40 years career, but I spent some time with outside in consulting for a little bit. I currently work for FM. We rebranded as FM in July of last year from FM Global. Um, I'm a chemical engineer, and I spent the first half of my career on the risk control side. Switched over to being a broker from after 9/11 until last year, where I joined FM and I helped lead our renewable energy practice, mainly insuring property insurance for those projects.
Interesting, interesting. And actually, what I haven't had a chance to tell Mike yet, too. He and I apparently have a mutual friend too in New Jersey, Sean Moriarty. I heard you guys played basketball together quite a bit, going back a ways. So it's funny,
Yeah,
small world.
yeah, it is a small. Mhm.
Okay, I guess just to jump in, guys, I want to get started talking about climate impacts themselves. It might just be me, but they seem to be increasing in how often they're happening, how severe, and just spreading to different geographies that they hadn't been before, haven't been as big as an issue before. Can we talk a little bit about climate change trends, what you've seen?
I mean, certainly the opinion of most insurance companies are that climate change is real. Take out the political aspect for a second, and they understand because they see it in their losses. Um, and you can't deny the numbers. Now, you get to the tricky part of trends and frequency, and there's certainly some trends that we can really look at in regards to certain perils. We understand that uh, hurricanes obviously thrive in warm conditions. So the warmer the sea surface temperatures are, the Gulf of Mexico or Gulf of America, and the mean development region of the Atlantic, we're going to see stronger hurricanes that way. So that's certainly something. And then there's also, for every 1 degree Celsius of warming within the atmosphere, we see 7% more rain development from any types of storms. So that's your standard thunderstorm that comes its way during the spring, but also your hurricanes, which just kind of exacerbates the flooding situations that we've seen over the past couple of years now. Certainly a lot more flooding events. And the trends tend to stick with looking at, if you break it down between like an Enso pattern, you look at El Nino, La Nina, and the neutral cycle. You certainly see a trend that we're beginning to see more La Ninas and neutral cycles, which under those developmental conditions alone tend to enhance hurricane activity over the Atlantic basin. So there's certainly some alarming things that we can look at when it comes to those trends.
That's interesting. I have a couple of follow-ups in mind also, but Mike, do you have anything to add there too?
Yeah, I agree with what Justin's noted. I would say that that the hurricanes are more intense, and part of that's because of the warmer oceans. We're also seeing hail more frequent than we have before, but also a lot of more projects that are in harm's way. Some of the projects that we insure or look to insure are in areas where there was farmland before and there wasn't good data before. So sometimes it's about increased activity, but sometimes it's because there's more stuff in harm's way. And I would also note that, as far as well, we'll get to that later on the insurance aspects.
Yeah, absolutely. I definitely do want to get to that too, but as a follow-up first, and you both kind of alluded to this, but I think especially Justin, out of all the increasing climate impacts around the world, one of the ones that I spend most time thinking about and frankly worries me the most are those cloudburst events, the 10 inches of rain in 9 hours, or those insane things that keep on happening. Has been any trend that you've been following that would actually worry you the most, or might actually be most potentially impactful for an insurance industry as they try to um, actually map out their plans?
Yeah, speaking of thunderstorm activity in general, the U.S. Industry saw $50 billion plus in insured losses when it comes to just SCS events or severe convective storms. Um, and that's happened now the past couple of years, and it's not something that was really a concern in years past where hurricanes were really the driving force. But when you get so many multiple small thunderstorm events, uh, it adds up really quickly. Now, the one thing I will note in the US market, flooding is not a covered peril under most insurance companies. So if my house gets flooded for whatever reason, and that's the only thing that happened, it's either going to be out of my pocket or it's out of the NFIP or the National Flood Insurance Program.
Interesting, interesting. Mike?
Yeah, let me step in on that. On the flood point, I think that's true on the residential side. On the commercial side for insurance, we do normally cover flood to a certain sublimit, subject to deductibles. But it is significantly, I agree completely that it's become a greater concern. On the thunderstorm side, I love the point Justin made about the 50 billion of severe convective storm losses. That's become a much greater component of the overall cat exposure that insurance companies are paying. There is a big distinction between on weather events and wildfire too, with respect to residential risks versus commercial risks. And there's challenges for the entire industry with these. And tornadoes, commercial insurers are comfortable insuring tornado risks. It's because tornadoes are normally local and they have a limited damage path of what they hit. But it is growing greatly because we're seeing more of these tornadoes. And Justin, feel free if you'd like to add more comments to that.
Yeah, I mean, I want to hit on actually a topic that Mike hit on earlier um, when it comes to population. And that's particular when they talk about hurricanes, but obviously we've seen that the US population is moving quite a bit. One is moving more into the rural areas outside of towns. So there's a very common description in our industry where it's the expanding bullseye effect, where that tornado path that went through that town in 1950 caused, let's say, $1 million worth of damage. But now, due to the growth of that town, that one tornado that was everything was exactly the same except for population. Now it costs, let's say, 50 billion, depending on what structures have been built there. And then we also see a lot of people moving down to the coastal areas of Florida, Louisiana, Texas, wherever, because people like that warm beach type atmosphere, but they don't think of the risks that from natural disasters that may occur.
Interesting. Interesting. I think it's a good spot probably too, just to start talking about fundamentally how do insurance companies think of climate change and how do they factor that into their policies?
Yeah, it's a little bit of a loaded question. So insurance companies, your standard that you would get your homeowners or auto through for residential, those insurance companies have to usually file some type of rate filing within the state, and every state is different. So if I want to hike up my insurance rates, I have to provide reason on why that is. So putting climate change into an insurer's kind of domain is really tough because you have to get approval from so many levels. However, on the reinsurance side, they can do whatever they want because reinsurance is a less regulated industry. So for those of your listeners who don't know what that is, reinsurance is just insurance for insurance companies. So when company A sees a $50 billion loss, just like if your home sees a large loss, you call insurance to get some money back. Well, insurance companies do the same thing. It's essentially to keep the market stable and we don't see so many insolvencies. But the reinsurance companies can run the data and then put on additional loads. And I've worked at a reinsurance company and I've done that before, so I know it's perfectly accepted. And a number of insurance companies do it because they see the numbers in their loss and they want to account for that.
Let me just add to that there's a lot of dynamics that are going on in the insurance market overall, like the fact that a lot of the cat exposure in the U.S. has been subsidized from by non-cat exposed to the cat exposed areas. So it was really underpriced insurance in places like Florida and California and the coastal where I live in New Jersey. That's changing, and what insurance companies are trying to do is allocate the correct amount of premium for each given area, and that's challenging because it hurts the clients that are paying it, but that's really more how it should be. But it's sticker shock for the customers in those areas where the insurance companies can do it. So we've seen a flight of some in home, especially on the residential side, and Justin can talk about this better than I can. The of insurers that were in California but can't raise the rates, as Justin had mentioned, and that were in Florida but want to raise the rates above a certain area and aren't able to because Florida there's different steps that the states have taken to protect the policyholders from the increased rates. They've set up government aided insurance programs that take some of the risk into their schemes at the cost of the taxpayers. And there are some companies, and we do this too on the commercial side, where you might get a risk-based premium credit if you build your projects more resiliently. That's one way to do this, but it's not being universally done, and it's not that easy to do. Justin?
Yeah, I like how you put that. We call them like insurers of the last resort, right? So like the biggest one that comes to mind, obviously for everyone, is probably Citizens in Florida. But a lot of other states have these FAIR plans as well. California has a FAIR plan. You can Google and you can find there's multiple FAIR plans in multiple different states. Um, the problem with this is that as a state, you don't want that citizens or that FAIR plan to have a lot of people, because if something really bad does happen, it's coming out of the taxpayers' dollars. So you don't want to have a large insurer of last resort. It was a couple of years ago where Citizens in Florida was the largest carrier of insurance in Florida. Um, that's not a good thing. We want to keep those numbers down low.
Yeah, and further to that, I mean, I think most people believe that Citizens is inadequately funded, so that if we have a series of events or a large event, that's going to end up being something that's paid by the government overall.
Yeah, and to hit on that exact same point, they're also extreme. Their rates are beyond low compared to what they should be in the market.
Exactly.
That's that's very interesting. But I guess, well, that's all very interesting for a lot of reasons. But no matter how this really shakes out, and no matter what state model is being used, it sounds like because climate change impacts are increasing and damages associated are increasing, one way or another, this has to get passed down to the ratepayers.
Yeah, I mean, in the end, someone has to pay for it, right? So in this case, it's eventually will shake out where the consumers or the policyholders are the ones paying it, because insurance companies and reinsurance companies, just like any other business, is a business in the end.
Sure.
And they're in business to make money.
Yeah, further to that, it's just you know, the real struggles right now with California insurance with the wildfires. I know that isn't specifically related to weather events, but they're not able to raise the rates to the point where they can be profitable. I've heard people say that insurers are paying out $2 in losses to $1 in premium, and they can subsidize a little bit for to be in California versus other states, but that's why companies are pulling out of California, and similarly why they pulled out of Florida, and it could happen in other states too.
That's a great segue to my next question on here. And this is interesting for me because you both come from different perspectives on the topic. Have you seen instances where companies or projects decide to not build in a certain area because of the insurance risk or the insurance dollars associated with it? Mike?
Yeah, we are seeing that for renewable projects in Texas in particular. Texas is so I shouldn't say just renewables. Really, it's mainly solar projects. So solar projects have a lot of glass, and these projects are being built where there's cheap land and where there's a lot of sun. And Texas fills the bill for both things. But there's also hail there, and hail is like falling rocks. It's going to break glass. So there are some areas where the projects are not resilient enough to handle even a 1 in 5 year event or a 1 in 10 year event. And so we, as the insurance community and others, are starting to talk to customers about, do you really want to build it here? Maybe you should build this in a less hail prone area, or you can build it more resiliently. And there's several different ways you can do it: thicker glass, different glass, stowing capability of making the glass at an angle so that when the hail hits, it deflects off and can be effective in mitigating loss. But it's not happening yet in anywhere except for in Texas. But in time, I think it's going to happen more.
Interesting.
Yeah, I think of two things when it comes to this. One is barrier islands. Um, why are we building on barrier islands and why are people insuring them? The barrier island is there for a reason to prevent or to slow progression of wind and things like that. So if my house is right on a barrier island, then I'm taking the full brunt of that hurricane. And then the second one I think of is wildfire in California. And we build a number of communities right next to very well forested areas. In other words, a whole lot of fuel for a fire. And we don't put defensible spaces um, between the houses and the forest. And that's where large losses come into play.
That's a I keep going back to where interesting because frankly this is all interesting for me. But Jesse, you just described a lot of what I would call objective things to take into account while you're making a planning choice, while you're citing, as an example. Are more things like that starting to be taken into account by the right people as we see impacts mount? Is this being noticed?
Yeah, I mean, it just depends on the insurance company at the same time because if my insurance company doesn't give me a credit for dispensable spaces in California for wildfire, then why am I going to spend money to do that when my insurance premium doesn't change? Now, if I can get a $5,000, $10,000 credit or for whatever, if I put in all these defensible spaces, okay, well then it makes it worth it. But you really need to see the action. One by um, the rating agencies. So your AM Best, your Demotech come to mind, and the rating agencies will essentially force your insurance companies to make those changes.
Let me add on to that too, that sometimes the building in the resilient or making it more resilient, there's a cost to that. And we get that question from clients all the time. How much will I save if I build this more resiliently? And to be fair to the client, it's not sometimes a relatively small amount of benefit to the amount of money they're going to outlay for it. That's one thing that FM is trying to do. We issue credits to our clients specifically for resiliency purposes, so that if we have a good year, we give money back for the clients to invest in resiliency, and that's better for us because our clients have smaller and fewer losses.
That'd be better for me too. Actually, living in New Jersey as well, insurance is high on everything, so that's actually nice to hear. And that kind of leads to my next question. You both kind of alluded to various parts of the country having their own models. Is there a state or a couple of states you could think of that handle this in an interesting, cutting edge way?
Well, most insurance companies use two primary models when it comes to looking at catastrophe risk. Moody's RMS and Verisk, previously or formerly AIR. And those are going to be the primary models that most insurance companies use when it comes to looking at their insured losses and things like that. So um, those are built by companies with multiple research teams and multiple people looking at the various intricacies of perils and losses that we don't necessarily don't all have time to do at an insurance company, reinsurance, or even at the brokerage level. So there's not much that can be done there, but there are certain states that maybe do things in a better way than other states. The one that comes to mind is Louisiana is doing a decent job when it comes to keeping people out of that insurer of last resort. And I think Florida would do well to model that as well. But once again, it's up to the states.
Let me just add on the modeling. I agree with Justin about the two primary models, but the models do a pretty good job on flood, earthquake, and hurricane, but they're not as well developed on severe convective storm, and that's a problem. And especially and for someone who works in the renewables industry, it's really not very good at all for those models for solar risks in a particular, because they don't have a construction class for it. And they also, if you're doing an RMS or an AIR model and you have 1,000-acre site and you put it into your model, it comes up as one data point. So it's like a skyscraper of solar farm. It's just not indicative. There are some specialty models that are being put out by the likes of ABS and VDE and others that are that are a little better. But just to give an indication, there was a large event that happened in March 2024 to a project in Fort Bend, Texas, where the insurance model, the sophisticated insurance model, predicted something less than 20 million, and the loss was about 100 million. So, and this is not uncommon. So the modeling needs to get a lot better. And there are reasons why there isn't focus in these areas, because there just wasn't enough. The models that Justin was talking about are mostly for commercial risks, for buildings, for a lot of manufacturing facilities that are more common build construction. The market hasn't gone to build anything specific to the industry I serve.
Okay.
Yeah, and to add on to Mike's point there, the hurricane model from both companies, RMS and Verisk, are kind of the gold standard because they're updated every 2 years. That's required by the Florida Commission. So the state of Florida requires that. And that SCS model, he is 100% right. Both of them are extremely outdated. And you think of all those SCS events that have happened in the last 5-10 years. You think about the Joplin tornado, the Tuscaloosa outbreak, the Iowa derecho. All that claims data, all that weather data is not in those models right now.
As Justin was talking, I started thinking about the cuts that have been proposed on the federal level to critical agencies like actually NOAA and a few others that help with these models and try to do better at predicting what could be coming through. I don't want this to get political by any stretch, but can you both speak to potential impacts of what those budget cuts might actually affect?
Yeah, I mean, it's hard to say, they literally just happened, so it's hard to say or even see impacts right now. The one thing I will mention is that every private company, when I say that, I'm talking about the weather channel that maybe you have the app on your phone, AccuWeather, maybe you're Googling to see what the temperature is around your area, and Verisk and RMS, the models that we use in our industry. Every single private company uses NOAA National Weather Service data. It's the most up-to-date data there is. It's the most historically significant data there is. And all that is done by the National Weather Service. Will that stay around? I sure hope so. Could we see issues when it comes to getting data out to the private sector like us? It's hard to say right now, but that just kind of gives you an idea of how important the National Weather Service really is.
I'll add to that, and I know I'm being specific to renewables, but these solar projects, they are told, or they have a lot of exposed risk to this particular issue of hail. And what they do to try and protect those assets is you stow at a high angle, as I mentioned before, really, really reliant on National Weather Service information. These companies like DTN, as to Justin's point, everybody relies on National Weather Service data. If that data is no longer available, I worry that some of these clients that want to or are looking to do the right thing and be defensively stow in advance of a storm won't have the appropriate warning to be able to do that, leaving their projects very well exposed. And we've seen projects that don't stow have significantly more damage.
I guess a follow-up from Mike on this, speaking about renewables development, could something like this be another deterrent for project developers looking to expand within the country if they don't have reliable information I would think they'd be less likely to build in certain areas, as you mentioned before.
You know, you would think maybe, Chris, but I think that the insurance is not at the top of the list on what they're looking for. But where it could be a difference is on the cost of the insurance. So insurers are now trying to get more sophisticated in taking into account the resilience of the projects that they're being built and the resilience of the defensive mechanisms that they have. We can't, as insurers, give as much credit to the site being able to effectively stow if we don't believe they are going to have the information to know to effectively stow in advance of the storm. So that's going to cause, and the cost for insurance for these projects is significant. It's about 30% of their operating expenses, which is much greater than a lot of other industries that sometimes are in the less than 10% range.
Hmm. Going back to something we talked about before, I was just thinking about how we price out the impacts of these storms and what exactly is meant by $100 billion storm, as an example. Just from my experience in project management, you first give a budgetary estimate for what the high side is going to be, but then oftentimes, as you do the project, it comes in a good deal under that. Is the $100 billion project potentially really only a $70 billion one? And I say only half, half smiling out of the back of my head here, but how do you come about those numbers? Because I never quite understood that process.
Yeah, so when you get those kind of statistics and things like that, we work within our industry on return periods. A 1 in 500 year event, as you were kind of already alluding to, right? So um, that's kind of what it's alluding to there. Now, that's kind of a that's kind of a tricky um, way to put things. So basically, a 1 in 500 year flood event is a zero point 0.2 chance of that flood at that magnitude or greater occurring in any given year, if that makes sense. So essentially, what we're looking at is there's a 0.2% chance of that flood happening. And you often see on the news of 100-year rainstorm event or hurricane or something like that. It's a percentage game. That's all it is.
Let me add to that. I think if you go back to a few years ago when we had Hurricane Harvey come through, that was a 100-year event, but then we had another 100-year event after that the following year, and part of that is because the idea of 100-year flood, 100-year event is backward looking, right? So I think all of us on this call and many listening would agree that the climate is changing and we are seeing more frequent storm activity, so that we only can use the data we have, but the data is changing, so that's a really challenging thing to deal with.
Yeah, and that's a great point, Mike. And when we look at the models that we use, as he already alluded to, is they're very much retrospectively looking at things and then providing us analytical output. The modeling companies do their best to kind of simulate potential events, but the data they're working on is historical data.
Yeah, and there are some companies out there that are trying to help clients when building projects on looking forward on what the climate's gonna look at for the lifetime of the project. And this is beyond renewables, this is everything. Swiss Re, Munich Re have some data that says, all right, based on our information and trends, we think that you're gonna need to build to this type of resiliency going forward as opposed to what you've done historically. We don't know if it's right, but it's certainly a step in the right direction.
Hmm. We're starting to get up on time here a little bit. Just have a couple more questions. As both of you, I think, know, I do environmental justice and climate change work professionally and spend a lot of time thinking about the concept of climate justice. And part of that is based on the principle that overburdened areas get more than their fair share of climate impacts and often don't have the capabilities and actual resiliency to adequately respond to those impacts. With the costs of insurance rising and basically inevitably being passed down, to the consumer, I would think that this is only going to be more of a climate justice issue as time goes on. I don't know if any one of you would like to comment on that at all.
Yeah, I mean, I think that's a fair statement to make. The places that we are seeing extreme events right now, you think of Florida, you think of Louisiana when it comes to hurricanes, you think of California when it comes to wildfires, the Midwest in general when it comes to SES events. Um, those places that are already feeling the impact, it's only going to get potentially worse if we see a continuously warming climate. And it's something to keep in mind if you live in a poor area or a very small town within, impacts of these perils. It could certainly impact your premium and eventually your pocketbook.
Yeah, and I agree with Justin. I do further to that. There are some areas that are exposed to climate activity that are more for the more where people are more wealthy. Like you see, in Florida, coastal Florida, it has a lot of people that have expensive houses there and all along the coast where the beach is, and certainly somewhere the wildfires have been. But a lot of the activity for climate is in areas where land is cheap because the climate activity is frequent. So and that continues to happen. So there's going to continue to be issues with environment, growing issues with environmental justice for that.
I don't actually recall who was talking about this earlier, but as one last things I want to ask you guys, I understand it. You have to have explicitly have the type of impact spelled out in your insurance to be protected for that. As Justin was saying, most plans don't account for flood damage unless you have flood damage. Is there an overarching umbrella plan or project here that you can get to better protect yourself, your project for these issues? Or is it, or is still the best way to go about this a la carte? I think I need this, that, and just sit down with an agent or whoever and try to do your best to minimize risk.
Yeah, I mean, it's going to depend on your insurance company, obviously, and what kind of their policies that they offer. But I mean, if you ask your insurance agent or whoever it ends up being that you want some flood coverage, I guarantee you they're going to sell it to you. They're going to they'll gladly take your money if you want more insurance.
That's a good one.
They'll do the proper risk assessment and they'll provide a premium out to you. But you really just have to ask. I live in Kentucky and we're close enough to the New Madrid Fault where I wanted earthquake coverage for my house. So I requested it and it's on my policy right now.
Yeah, and further to that, I think that in the commercial space, one of the jobs the broker does is they do some of this modeling using the RMS and Verisk models, but they also do more sophisticated analytics for larger clients to establish what type of limits they should buy. It's not just the limits they should buy, but also the retentions they should take based on. There's a lot of different information that goes into figuring out what do we expect the right number it is to buy? And part of that's history too, right? So the models may not be perfect, but if you've seen, the clients that have had $50 million SCS losses, it's probably a good idea to try to buy that much coverage if you can.
Yeah, that makes
Yeah,
sense.
and I think we've seen also a lot of insurance companies really, really look into their RCAs or reinsurance cost allocation numbers. How much is reinsuring this one individual policy? How much is that going to cost me? Am I making money on it? And that's something we've really seen at the brokerage level. A lot of insurance companies really digging into those numbers because if I can eliminate or non-renew 1,000 policies, but decrease my PMLs by $15 million, that's worth it for an insurance company.
Yeah, I think what you're getting alluding to is aggregation of risk in a given area, and insurers do a try are doing a better job and looking more carefully at that over time, so that they don't want to get hit. It's a bigger issue for earthquakes and windstorms than it is for SCS events, but it's becoming a lot bigger on SCS events because, as Justin mentioned, we're seeing many more the SCS events being a bigger component overall of the cat exposure insurers face.
That's one of the last questions in every episode. I like to ask the experts who come on if they have any recommendations for younger people or students who might be interested in these topics, want to learn more, or potentially want to also choose it as a profession. So, if you have any suggestions for references.
Yeah, I mean, feel free to. I talk to at least one or two students every week in regards to this industry, and so obviously talking to industry professionals. But I guarantee you there are internships out there that help you kind of gain a foot and understand the insurance industry. Most people don't go to school for insurance specifically. Um, I have a degree in meteorology, and I never thought I work in insurance, but I love what I do. So um, just gaining an understanding of this industry and all of its complexities that it has.
Yeah, I agree with what Justin said too, and I would say overall the insurance industry is really an underappreciated industry for a place to work. I've loved working here too. I left insurance 30 years ago and got back in because it was just a really good industry to learn, and you learn a lot about different industries, different things to do. As far as other things young people can do, they can reach out to me too. Do a lot of talking with younger people, but it's really interesting how the development of the people in the insurance industry are. I mentioned before I'm a chemical engineer. I never would have thought I was going to be in insurance. Was a meteorologist or meteorology major. There's more and more people in meteorology coming into the insurance field because extreme weather is becoming a much bigger component of insurers' concerns. So, and I would also suggest, reach out to people, make connections, go on to LinkedIn, listen to podcasts. There's a lot of information out there, and there's a lot of opportunity as well.
I think that's great. I want to also offer you guys each an opportunity to give any final thoughts or parting thoughts you might have on the topics we've been talking about. Justin, if you want to go first, or Mike.
Yeah, sure. Um, we've obviously talked about a number of different kind of sectors when it comes to insurance, climate change, weather in general. For just your standard person just listening out there for knowledge base, as I've kind of already hit, be aware of what perils could affect your home or your car, where you live, and make sure you're insured for them. I get it, insurance can be expensive. I pay it myself. But in the end, um, it's going to be worth it. We see a lot of people from Hurricane Helene in the Carolinas in near Asheville that experienced extreme flooding from that event. You see people in California from the wildfires, and those people who are uninsured, that's straight out of your pocket. And most people can't afford to replace a home and all of its contents.
And I would just add that you want to think strategically about, how you buy your insurance. It's there's a lot of and the insurance community overall gets a bad name sometimes because they don't pay out a claim, but they're protecting themselves too. And as Justin mentioned, insurers are in business to make money too, So it's a good it's smart to understand how your coverage works and what you have and what you don't have. And most policyholders don't do that on the residential side or the customer side. And frankly, the industry doesn't do a good job of explaining to clients how their policies work. That is, not to put another plug in, that's one area where I was always very impressed with FM because we sit down with our policyholders, explain to them how their coverage works, and often the client will come back to us and say, hey, I don't have coverage for this. Is there a way to do that? And we'll try to do that in many cases.
Interesting. Well, thank you both. I've definitely enjoyed this hour, and as I expected, learned quite a bit. So you're definitely welcome back anytime you want to chat. And I've ex been extremely proud of the alumni network I've developed on this program. So all of us try to stay connected, go out to dinners and stuff, and just try to work on projects together. Because as I've found over the years, if you find something you're passionate about and start collaborating with people, you end up working together on other things. So I look forward to that, hopefully, and that. Thank you very much.